Okay, folks, welcome to Sunday Night Futures Live. The markets are open and we are ready for a brand new trading week. I don't know why my camera is sitting up so high. It's been driving me crazy. Let's try that. It may slide back. Okay. We have a lot to talk about. We have the election coming up. We have volatility that's bound to hit this market. And the way the markets are opening up right now, volatility is already here. So let me share my screen so I could show you what I'm seeing here. And I can get an audio check from you fine people out there. I would truly appreciate it. And we will get started with the new trading week. Okay, we have a screen share. Awesome. Okay, Franklin, welcome. And I got my sound check. Awesome. Awesome. Thank you. Tim, welcome. Thank you. Thank you for being here. Okay. Let's talk about the opening price action here. We have a gap down on the S&P 500 by about a quarter percentage point. I'm not shocked at all. So right off the bat, we're going to set up some alerts here. What you're looking at is a 5-minute chart of the S&P 500. And most importantly, I want to know if we take out session lows, which it appears that we are about to. Let's just take a moment here. Watch this. I'm looking at the volume. Volume is pretty heavy. Okay, let's let it settle down. Let's move on to the NQ. This is the NASDAQ 100, also known as the triple Qs. Wow, we have a big gap down here on the NASDAQ 100, down 0.36, 0.37%. Let's set up the same alerts. We're gapping down through resistance. Now they're going to try to recapture it, doing a check back. All right, they're trying to hold that support level. Volume appears heavier on the S&P 500 than it does on the NASDAQ 100. That camera slid back again. God darn it. I don't know what's causing that. I'm sorry. I'm going ahead here. All right, so they're rallying it back right now. Let's continue on. Let's take a look at the... why is my drawing tool stuck? Okay. Let's go to the Russell 2000. Gapping down as well. Wow, this is down over a half percentage point. Let's do the same as we did on the others. Do we get lower lows? NQ just was able to put in a higher high, but still down on the session. Volume looks pretty light on the Russell 2000. Let's take a look at the YM. The YM is the Dow Jones Industrial Average, down 0.26%. E-minis just took out that higher high alert. The S&P E-minis. Dow Jones down 0.24%. So now the question is, we're seeing a counter trend move here off the gap down. Does it hold or do they fade it? That's the question. If they fade it and they press this lower, I think volume's going to pick up and you're probably going to have an ugly open tomorrow morning. Let's check in with the US dollar. The dollar had a very strong session on Friday, but man, what a gap down here at the open. Why is it showing positive? Do we have a new contract? What's going on here? I said we were on a 1 minute chart, a 5 minute chart. I was wrong. We were on a 1 minute chart. My apologies. I don't know why this is showing. It's not a new contract either, but it's showing that we're up. We're not up. We're clearly down on the session. Okay. So we have the pulse check of the dollar. One would assume that gold might be rallying. It is not. It is down as well. The thing to keep in mind here is that you've had the dollar and gold as well as silver, palladium all rally together. And I think the lack of response by the Iranians after the Israeli attack on Iran and the comments by Iran that, that's pretty much tit for tat is done. I think that took a lot of any geopolitical risk out of the market, allowing for both the precious metals markets and the dollar to come in a bit. So, no great shock. At some point in time, that inverse correlation will return. But right now, it looks like the froth is coming off of precious metals and the US dollar. Let's take a look at silver. Silver gapping down as well. It's far more volatile than gold, gapping down over a half percentage point. They're trying to reverse it. If they do reverse it, it's going to have you rip your face off rally. If they take out this high here at the open, initially they tried to rally silver, but ultimately the bears won out the first 5 minutes. Okay. Let's check in with natty gas. Wow. Jesus. Natural gas can't catch a break. Natural gas down over 3%. Amazing. Really amazing stuff. As for oil, it is up 1.31%. OPEC threatening to not increase production as they had committed to. And that is reflected, of course, now in the price of oil. Now, keep in mind also that we have the election coming up in a couple of days that can have a real serious impact on the price of oil. So if Kamala wins, they will probably bid oil. If Trump wins, oil will probably sell off because he's promising to produce more of it. And that he's hoping will help stoke GDP growth here in the United States. Live cattle, higher lows. This is my Kamala trade. If she wins, this is going to skyrocket. If Trump wins, I think this drops like a rock. Soybeans, they are up fractionally. Let's go to wheat and corn. Wheat looking very weak. Topping action. This is setting up as a short. Intraday short. I'm not going to do it. As for corn looking very good. Very good. This is a 30-minute chart. And we're breaking out. So corn, bullish. Now I want to take a look at volatility. The volatility is actually down. I'm very surprised to see that. Let's bring up the NQ here. NQ remains down. Okay. Yields are pulling back. 10-year down 0.41%. Volatility looks as though it's looking to make a comeback. This is a 30-minute chart, so not insignificant. NQ beginning to fade here a bit. So we'll check back as these alerts fire off. Let's head on over and talk about what we're going to talk about today. First off, folks, if you're not a part of our trading community, great people. We have my feed where I post a lot of news, trades, and whatnot. So you'll have access to that. In the Bull Bear Banter area, this is our chat room. And this is where we have a lot of conversation with regards to the markets. And again, great people. So please sign up. And it's free for now. As soon as I figure out how to close it out on my own without having to hire somebody, I'm going to close it out. There'll be a charge to join. So take advantage of it right here, right now. Use the link below, or you can just scan it. You have a barcode or a QR code, whatever you call that thing, that is in front of you. You could scan it, and no credit card required. All right, let's talk about the week that's coming up. So we're seeing how the futures. Let's say hello to folks first. Sean, welcome. Thank you, sir. Appreciate that. Polls now showing Harris leading in a lot of swing states. Could be why futures down. It could be, but are you referencing the betting polls? I've always said that I don't trust them. So I'm not going to go by the betting polls. That turnaround, I think this is all a bait and switch by the Harris campaign to show that everybody's woken up to how great she is. I hope that I'm right. I really hope I'm right, because I can't imagine this. I can't imagine a more unqualified individual to be sitting in that chair. So scary stuff. Talon. Gray, hey Bob, what do you think about TLT? You got to put it in the feed, folks. Put your symbols in the feed. I can't track them all in the stream. It's too much. So we have a bunch of them in here already. Bonnie Bean, Jim, David. We have Tim, Lawrence, Andrew, Franklin, Jim. Okay, so we have a whole bunch. Head on over, use the link below or scan your QR code. Nobody's going to ask you for a credit card. All right, let's talk about economic data that is set to be announced this week. I think that this is more of a secondary influencer to the markets. You have earnings coming out this week, and of course the election, and of course the Federal Reserve. So on Tuesday, actually Monday, we get factory orders. Tuesday, ISM services. Any read below 50 is a sign of contraction. They're expecting a positive read. Wednesday, we get S&P U.S. Services PMI. Thursday, initial jobless claims. We got a weak number last week. U.S. productivity, wholesale inventories. For whatever reason, you have the Federal Reserve making their announcement on a Thursday. So strange. I've never seen that before. Consumer credit, not a big deal. Friday, consumer sentiment, very important number with a couple of Fed heads to follow up. So this is going to be an earnings week. It's going to be about the Fed. It's going to be about the election, not necessarily in that order. I would say the election is going to be the primary driver of the markets to a lesser extent. We already know what the Federal Reserve is going to do. But what will they say about rate cuts moving forward? That's the big question. In terms of earnings tomorrow morning, we're going to be getting Marriott coming out. God damn it. And they'll be reporting tomorrow morning. Other than that, nothing really else important. After the close tomorrow, we get Palantir. That's going to be an interesting one. Hims and Hers, that's a very, very profitable company. Illumina, great chart set up there on Illumina. We went over this afternoon on one of my live streams where I did a scan using TrendSpider. So if you're interested in that, it's linked on YouTube. You can go check it out whenever you want. I also did an analysis on SoFi. I know a lot of you like that stock, so I figured why not? I'll do it on SoFi. So Illumina coming out. That should be interesting. I love the chart set up there. That's the only reason why I'm talking about it. Tuesday, what do we get? ADM, Archer Daniels Midland. We get Ferrari, race the symbol. After the close, Super Micro, SMCI reports. That's going to be a real interesting one. If there's one report that's going to be interesting this week, it's going to be Super Micro. Devon Energy comes out. It's Microchip Technologies is coming out Wednesday. Before the bell, we get CVS, Teva Pharmaceutical, Johnson Controls, American Electric Power. I went over that symbol about 2 weeks ago. That chart was looking pretty good. After the close Wednesday, we get ARM Holdings, AMC, Qualcomm. That's a Pimp Mac Daddy stock coming out after the close on Wednesday. Thursday, Moderna, that stock has been beaten to death. Datadog, great chart setup. It's one of the charts I went over this afternoon. Great chart setup, great fundamentals. I just can't buy it until after earnings. Hershey's coming out. Thursday, after the close, we get DraftKings, Block, formerly known as Square, Rivian, The Trade Desk. It's a very, very strong stock. Affirm, that's buy now, pay never. And Airbnb and Pinterest after the bell on Thursday. Friday, Canopy Growth, that stock has been killed. Floor, and that's about it. That's about it. So a big week, busy week in terms of economic data. More your mid-cap stocks this week. And, of course, some of the big semis. Moving on. Okay, so I pulled a bunch of charts off Charlie Bellio's Twitter feed or X feed. 12,000 U.S. jobs were added in October. That's total, including government. The smallest gain since December 2020 and well below estimates of 125,000 increase. The prior 2 months were both revised down. We knew this was coming. There's going to be another revision after the election, guaranteed. As sure as God made green little apples, you're going to see a jobs revision. It's probably going to knock your socks off, but it's got to be after the election. Both were revised down, 31,000 in September, negative 81,000 in August. This was, however, the 46th consecutive month of payroll growth in the U.S. Not so oddly enough, the upper tier, when you X out the peak of 2017, that's the expansion that began post-financial crisis. So if you X that out, we're at the upper range of how long you have jobs growth in the United States. So we're on borrowed time here. And if you believe the numbers that are being put out by the administration, I don't. I think that we could quite easily be in negative territory right here and right now. And that 46-month number is probably, it's hopium. I don't think it's for real. I think that we're probably in a jobs loss environment. All signs are pointing towards it. In fact, when you take a look at, this is off the Kobisi letter. This is concerning. The U.S. economy lost 28,000 private jobs in October. Remember, the other report said it was a growth of 12,000. That includes government workers. The first net loss since December of 2020. Furthermore, the 3-month moving averages declined to 67,000, the lowest since the 2020 pandemic. This is well below the average of 150,000 monthly private payroll additions seen in 2018 to 2019 prior to the pandemic. The worst part, full-time private sector jobs have dropped by a whopping 1.5 million year over year. Such a drop in full-time private jobs has never been seen outside of recessions. The labor market may not be as strong as it seems. No joke. We've been saying that for months now. Remember, it was only about 2 months ago where they came out and they revised down a full year's worth of jobs by over 800,000 jobs that never really existed that they reported. And remember, every time they report those big beats on jobs, the stock market rallies. So if those numbers were false, are we supposed to be where we're at these levels in the stock market? Riddle me that. Come on. Okay, so this is off a bar chart. There will only be one more interest rate cut this year. This is posted on the 29th. So it could have been originally posted on bar chart on the, bar chart on the 28th. So he's talking about the November cut. And this is a warning from BlackRock CEO Larry Fink, who is definitely in the know, who believes the markets may end up disappointed. Now, here's the contradiction. When you go to the CME Fed Watch tool, good old Larry here is saying you're only going to get one more rate cut. That's in November. Check that box. We know we're getting a rate cut. But December, they're still pricing in a 100% probability of a rate cut. Now, let's just say, you know what, he made an off-the-cuff mistake. He meant, he meant that December was going to be the last rate cut. Okay. You go out to January, 100% probability of a rate cut. March, 100% probability of a rate cut. So the market is pricing in. I don't want to go any further than that. Market is pricing in more rate cuts, and they may not get it. And the bond market is sending signals that good old Larry here may be right. Because this is mind-blowing to me. This chart shows the rise in long-term rates never after a first rate cut is unprecedented. So I don't like the way you worded this. The market is rejecting the Fed's rate cutting policy. Why? The economy is good, inflation is not solved, and don't need monetary stimulus. Okay, so it's not unusual for the 10-year yield to rally immediately following a rate cut. So let's call it 60% of the times, the knee-jerk reaction is going to be the upside for the 10-year yield because it was priced in. And they're selling the news on bonds, driving up the 10-year yield. The problem is that we've never, ever gone out, since this was published, I guess a day or so, maybe just today, off of Bloomberg, 33 days. Look at where we're at current. We have never seen a move to the upside in the 10-year yield in a new rate cut regime. This is off the charts. And you might be thinking, well, you know what? Maybe the 10 years done going up. Take a look at the chart. Oh. This does not look like it's done going up. This is the 10-year yield weekly view. Folks, they may be buying bonds after the election, driving down yields. Remember, we have the election. So perhaps they're dumping bonds into the election. It doesn't make sense to me, but maybe I just don't get it. And they're driving up the 10-year yield. If all things remain equal and it stays the same, we could be seeing a 4.8 handle on the 10-year yield in a rate cut regime. Think about it. Something's very, very off here. Very, very off. And at the same time as we're getting the 10-year yield moving up higher, remember, when yields increase, what happens? Well, it slows the economy down and it increases the borrowing costs for business and the consumer. So let's take a look at valuations, where we were at 37, I believe, this time last week on the Shiller PE multiple. Remember, we had a lot of companies report earnings last week, S&P 500 companies. Guess what? The multiple didn't change much. So we're just off of the October 2021 highs. Yet yields are moving up higher. Investors are now paying 25.8 times peak S&P 500 earnings. The highest valuation, this is a forward-looking number, the highest valuation we've seen since 2000 and 50% above the historical mean. A decade ago, the same ratio was 17.2, right at the historical median. So equities, forward-looking here, or rear view mirror looking or trailing basis here, they're very expensive. Yet the 10-year yield is increasing. That's going to slow the economy. And jobless claims are rising. Or I should say, job losses are rising. And job creation slowing, and job openings are declining as well. So Warren Buffett, whether you like him or don't, you got to respect him. So Warren Buffett has just sold off another $14.3 billion of Apple stock during Q3 of 2024. This means Warren Buffett's Hathaway has sold 100. Something just fired off. Silver just broke out. I bet you that's going to squeeze higher. That was a 30-minute reversal bar. Right there. Beautiful bullish reversal bar on silver. This is going to pull back again. and do a retest. This is probably going up. See what the NASDAQ is doing. The NASDAQ's recovered quite a bit of ground. Okay. All right, so back to good old Warren Buffett. He's sold over $100 billion of Apple stock over the past 2 quarters. Uncle Warren's checking out, and for good reason. He's worried. Warren Buffett is on a massive stock selling spree. He's dumped $166 billion of stocks over the past 2 years, including nearly $110 billion worth of Apple stock. He's pumping all that into cash. Look at this war chest he's sitting on. This goes back to 1991. Never has he had such a capital raise as he does right now. Incredible. And looking at Apple's revenues, Apple revenues increased 6% over last year to $94.9 billion, a record high for the third quarter and the highest growth rate since Q3 2022. Net income fell 36% year over year to $14.7 billion due to a one-time charge from a tax decision in Europe. So when I look at this growth chart, I see lethargic growth here. You have lower highs. It looks as though we're trying to step in and put in higher lows. But right now, this growth chart on Apple is really, it's kind of depressing, vacillating between positive and negative. They need a killer product, and they haven't had one since Steve Jobs died. And here's the rub. Apple has bought back $655 billion in stock over the past 10 years, which is greater than the market cap of 490 companies in the S&P 500. Think about that. Who else is selling? Bezos to sell 16.4 million Amazon shares worth over $3 billion. You've had Zuckerberg over at Meta dumping shares of Meta for quite some time. I haven't looked at this in a while. Let's see what he's been doing of late. Zuckerberg, as recently as October the 30th, sold some back on the 14th. I believe he's on an automated plan. Looks like he's selling every single week. We could just filter down to the top tier. Here we go. Look at all the stock he's been selling. He's slowed the rate of selling, but net, he's been selling this stock for a while now. So it's clear you haven't seen any insider buying at Meta, which should put concern into the hearts of those people that are buying these stocks with the valuation so high. And add to that you have the yield curve on a weekly time frame. We broke out last week. You know, this had gotten mired down, but we'll take a look at how we closed out the month of October. I believe we closed down fractionally on the month. What the heck is going on? Only when I'm live. Incredible. Yeah, we closed down the month of October, but closed out last week pretty strong. It looks as though we're going to have a continuation move up. Let's do some chart requests. First, let's say hello. Paul, welcome. Tom, hey, Bob, Warren is right. Keep 30% cash at all times. It's always good to have a little war chest. No doubt about it. I'm a big believer in that. 20% gold ETFs and 10% Magic 7. No one ever mentions Schiller PE anymore. We do here. We look at both sides. We look at forward looking and we look at trailing. You know, and nobody wants to pay attention to multiples until it's time to pay attention to multiples. And that's when the stock market's selling off. And everybody on CNBC is, wow, the multiple is so overbought. Hey, they didn't want to talk about it before the market started selling off. They'll talk about it now as being the reason why the market's selling off. It's crazy. Here's the VIX for last week. Folks, you remember back in the early July when we had that big spike up in the VIX? We're re-breaking out yet again. We broke out the week prior to last, continuation breakout last week. It's going to be an interesting week, no doubt about it. Let's see what symbols we have to go over here. I'm going to close this out. Do a little bit of a refresh. All right. Previous comments. Sometimes I miss that. All right. Let's go over here. And we will. There we go. Okay. Folks, we're going to be using TrendSpider, automated technical analysis. You get all this stuff, insider transactions, seasonality, analyst ratings. If you're into that, unusual option activity, automated trend lines, automated Fibonacci's, candlestick pattern recognition, chart pattern recognition. Also, this crazy amount of powerful tools at your disposal for a very small amount. Use the link below. Get at least 35% discount if you watch this on YouTube. If you watch this on Twitter, use the link above. Again, a minimum of 35% discount off of TrendSpider. Very, very powerful functionality. And believe me, your competitors out there are using this. They sell a lot of memberships and they don't cancel. All right, AMD is the first up. We'll begin with the weekly chart. They did not have a good earnings report. Let's flip back to the candlesticks. This wants to go lower. AMD is in a downtrend channel. Why is this? I think it's going to log me out here. My Chrome just froze up. Hopefully I didn't lose everybody out there and I'm still live. Only when I'm live. Jesus Christ, Chrome. Sorry, folks. All right, so what I'm going to do is I'm going to stop sharing for a moment. If it lets me, no. Did it unfreeze? Yeah, it finally unfroze. Okay. I'm going to blow through these as quickly as possible. All right. Okay, getting back to AMD. We are in a downtrend channel. I am not a buyer here. I think that AMD is going lower. It's probably going down to 133 per share. It closed out the week last week at 141.86. I am not a buyer. I would be very, very careful of getting long of AMD. If anything, I would short AMD on a rally, or what I like to call a check back to this upper band of now resistance, was support in green at around 147.50 per share, give or take a dime. Doesn't have to be exact. I would fade AMD into that rally. So AMD to me is a short. Moving on to, and the one thing I will remind everybody, let's bring up trip cues for a moment. Seasonality, because I want to remind everybody, I'm saying I would short AMD. I want to keep everybody apprised of the seasonality time frame that we're going into. And in the month of November is seasonally the strongest month out of the year for the triple Qs. The same could be said for the S&P 500, up 78% of the times on the S&P 500, up, what was it, 76% on QQQ. So be careful in terms of size if you're deciding to short this time of year. Just be aware. We have path. This is for Lawrence. UI path. I don't see a reason to buy this stock. If you're an investor, if you're looking to invest, I guess it's fine. You're at a historical support level. One could argue that you have his head and shoulders set up, left shoulder, head, right shoulder, and we could break the neckline. So if you do enter this, you're going to want to stop out right below support at $10.29. So me, I just see dead money here. I don't see any excitement. The only thing I do see that's possibly confident or possibly exciting is a Bollinger Band squeeze. A Bollinger Band squeeze is when you have the Bollinger Bands in red trading inside the Keltner channels, and you could get a powerful move once that is resolved, meaning once the Bollinger Bands move outside the Keltner channels. That will get resolved at some point in time in the future. So you may get a rally up, a very strong rally here in the coming weeks, but it could take weeks, months for that to happen on a weekly Bollinger Band squeeze. Let's go to a daily chart, see what we have setting up there. You had a Bollinger Band squeeze on a daily chart. It fired off, but it was a nothing burger. So, this is just one to watch for me. I wouldn't buy it right here, right now, hoping that it moves up, unless, of course, it's got some insane fundamentals, which nobody's pricing in yet. Moving on to TGTX. TG Therapeutics. This is a weekly chart. Love this chart. So we're in an uptrend channel. We are probably going to go higher. The problem is that you're going to have resistance right up here at around $28 per share. We closed out the day on Friday at $26.90. So would I initiate a new trade here? No. If I owned it, I'd probably sell covered calls if they're optionable. If it's optionable, that would be my strategy here with TGTX. But it looks like it will be going up. Let's check out a daily view. Yeah, it's going up to resistance. Good looking chart. And maybe it breaks out, but I just wouldn't buy it into a resistance level. It's not what I do. Level 3 Harris, they reported really good numbers, and this chart, the daily chart, is not looking good. Neither is the weekly chart. We had broken out above resistance, failed to hold it last week. We're now holding on to this lower band of support on a weekly time frame. This could be turning into a short. Let's check out seasonality. unlike the S&P 500 and the Qs, which have a high probability of, we have a note from Trader Isaac. Trader Isaac. I'll reply back to you in a little while, Trader Isaac. It's a hybrid plan. It's a mixture, more like the middle plan. Okay, so I will get back to you. So again, unlike QQQ and S&P 500, you don't have that big cushion of seasonality safety. It's a good month, but not as strong as the triple Qs and the S&P 500. This could quite possibly be turning into a short. RKLB for Jim B. RKLB. Rocket Labs USA. I like this. Very nice chart. This is a weekly chart. We broke out back here the week of the 14th. We've never had a check back, but it looks as though it still wants to move up higher. I think this goes up higher. Next resistance level is at $12.23. Let's go to a monthly chart to get a better vibe. And here's the power. Before we go to the monthly chart, look at this squeeze that developed back here and how it fired off. It doubled. Monthly chart's looking outstanding. And here was a Bollinger Band squeeze back here. Outstanding. Daily chart. This is going up. This is a beautiful chart. We broke out on Friday. Watch for a check back sometime this week. I would be a buyer of Rocket Labs. Good looking chart. Bonnie Bean, Sid. Weekly view. Compañía. Surgencia. I can't say it. Oh, Christ. You can't see the chart? I'm really, really sorry. I didn't see that. I stopped sharing my screen. Well, I didn't do it. That's the freeze up. Thank you, Trader Isaac. Okay. So let's go back to Rocket Labs really quick. I don't know where I cut out. Let's go back to level 3 Harris really quick. I'll provide the visuals of what I was looking at. So we are testing the lower band of support here. If we break it, LHX becomes a short. Moving on to Rocket Labs. Weekly view. Here was that Bollinger Band squeeze. Monthly view. Again, Bollinger Band squeeze. It fired off for better than a double. Triple. If you bought it down here. Daily view. It broke out on Friday. Look for a check back. Look for a follow through. Bullish. Next chart up is for, oh, Sid. We need to go over Sid for Bonnie Bean. All right. So right off the bat, I do not like this chart. You do have a Bollinger Band squeeze setting up here, but it looks as though it may fire off to the downside. So what sometimes happens is that just before you get a bull move, and this is why I don't have a high conviction in this call yet. If we break down below this candlestick here from the 23rd, then it's going to be a sell-off to the downside. If we hold the support level here, they may reverse this because right before you get a Bollinger Band squeeze, remember what you're dealing with. To move these stocks that have been in the consolidation for so long, it means that you have a tug of war between bulls and bears. The only people that are going to be able to move this stock or a stock that is a Bollinger Band squeeze setup are institutions. Unless, of course, you have an earnings event or a big news event that allows the general public and institutions to drive the stock in one direction or the other. In this case here, let's assume that there are no earnings, there's no negative news, there's no positive news. The only thing that's going to move this stock up higher are institutions. And many times, because remember, what they need is liquidity. And to get liquidity, they know where the stop losses are at. So they'll blow out all those stop losses. It may cost them a couple of bucks to blow out those stop losses, but they're buying on the cheap as everybody else is panicking. So you see that many, many times when you get a Bollinger Band squeeze. Right before the breakout, you get a massive sell-off. That's the institutions taking out stops, and then they drive the stock up higher. So that could be what we're seeing here. So I don't want to dismiss this chart yet. Were there no Bollinger Band squeeze, I would say avoid it like the plague. Right now, I'm cautious. We'll watch it. Maybe we get a squeeze. Maybe we don't. If the squeeze fires off, it could be to the downside. Right now, I'm going to say 60% is going to fire off to the downside, 40% to the upside, given what I'm looking at right now. But it's worth the watch to keep an eye on. If it breaks out, as a matter of fact, let's do this. Let's do this. If we begin to break out here, this is the value of using the alert system. Breakthrough. I don't care if it touches or bounces. All I care about is a breakout and a confirmation candlestick pattern on a 4-hour time frame. I want to make sure this closes above 229 per share. And we'll keep this active for, I don't know. These setups could take a while, so we'll keep it active for 35 days. And now I set it and forget it. If it fires off, great. We may be a part of that short squeeze and the institutional accumulation. If it doesn't, we don't care. That would be my strategy. TLT, 20-year bond ETF. This is my worst performing position. For transparency, I own it. I want to be bullish. I want to be bullish, but I can't talk my book. I'll leave talking my book for the slick back salesman on CNBC. So unfortunately, we're going lower. It looks as though we're going to go lower. Yields are pulling back at current. Maybe we'll get an inside week, but right now it's not looking all that good. You have a couple of support levels immediately below 88.73. You can add to that count 90.07. Let's bring up the automated trend lines. Yeah. So they're picking off right down here. 88.73 is a probable support level. So I wouldn't buy it. If anything, it's a short, but you don't have much risk to reward here, so I wouldn't short it either. I'd sit it out. The daily chart looks like a horror show. Lots of topping tails here, meaning resistance above. We broke support on Friday. I think we're going down to high 80 handle. That's where I think we're going. I don't want to be wrong. It's what I own a lot of it. I bought it to be safe. Think about CVCO. Okay, CVCO weekly view. Ooh, pretty chart. Here was a Bollinger Band squeeze back here. It fired off. Now we're stair stepping higher. Here, here, we broke out. A check back to 436.11. I goofed up there. I didn't want to delete that. I wanted to create an alert. Touch, bounce, leave a little bit of sensitivity. There we go. I like this chart. CVO, retest, weekly support. And we'll keep this active for 18 days will do. Very nice setup here on CVCO. Very, very bullish. Big gap up. This is going to pull back. I don't think it's going to continue straight up higher. I think it's going higher eventually, but I think we're going to get a check back to support right where I set up that alert. And I'd be a buyer at that price point. Good looking chart. AMD we already did. For Trader Isaac, we have TGTX. Didn't we just do this one? Or am I losing my mind? Yeah, we just did this one. Tim asked for it as well. Popular symbol. All right, so we already did this one. And that's it, folks. Let's check back in with the futures actions, see how they're settling out. Not much movement on the NASDAQ. It has not gone positive. Looks like volume has slowed down quite a bit. E-minis. They could take out the lows of the session here. They're still down 0.13%. Natty Gas, it's paired some of its losses, but man, what a bloodbath. Still down 2.7%. Gold, still down fractionally, but off of its lows. Silver, still down fractionally. This is going to have to pull back. I may buy a little bit of silver tonight. What's the 4-hour chart looking like? That's pretty weak. Pretty weak. Okay, folks, let me go to comments. All right, we have Michael Anthony. Sean, have a good night, my friend. All right, folks, everybody have an awesome night. You have been giving us a great play. Thank you very much, Franklin. It means a lot. Thank you very much. Everybody have an awesome night. Thanks for being here. Don't forget, vote and vote for the right person, Donald Trump. And everybody have a profitable trading week. I'll talk to you soon. Be well.